Which option do we suggest for buying gold and why? We believe that the best option for investment in gold is sovereign gold bonds or SGBs. This has the best returns of all of the above options that we discussed earlier because it has no making charges, no cost of holdings, and no tax on your gains if you hold it until maturity. In fact, it even earns a simple interest at 2.5% per annum and has the highest safety. Well, the disadvantages are that there is a minimum investment of 1 gram of gold and you can buy it when the issue is open, so you may have to save up for it. It is less liquid if you need cash before it matures, and you get the cash back compulsorily upon maturity, even if you want to hold it for a longer time. This may, not be so much of an issue because there is no tax on capital gains on maturity, and you can use that same amount of money then to buy gold at that time. It is also possible to buy and sell SGBs on the stock market, so you don't really need to wait for an issue of a maturity. But in addition to the price of gold, the price on the stock market depends upon the demand and supply of the SGBs. So you may pay a little bit more when you want to buy and you get a little bit less when you want to sell. Sometimes on the stock market also, it may not be very liquid, but this is your best bet. The other option is to buy units of a gold mutual fund, which you can do for as low as 100 rupees. The funds usually charge an annual fee called a total expense ratio, which is also quite low. There are no making charges and it is safe and liquid. But the gold mutual funds are currently tax inefficient. For purchases after 1st of April 2023, the entire gain is taxable for you at your tax slab rate, and there is no benefit of a long-term capital gain. So we don't recommend gold mutual funds at all. And for these same reasons, we also don't recommend gold ETFs. Now, suppose you are buying gold intending to have physical gold to buy ornaments for a child's wedding or for some other occasion. In that case, we suggest you buy actual gold coins that have the least making charges. Again, the minimum investment size is 1 gram. Physical gold also has the benefit of long-term capital gains tax, but the burden to keep physical gold safe lies with you. If you convert any other form of gold to actual gold, it has a cost, so you will get less gold for that amount. At present, we don't recommend digital gold since there are no regulations to govern it, and we believe that it severely reduces its safety. Then there is EGR or electronic gold receipts, which we think is safer since it is under the purview of SEBI. In case of EGR, converting EGR to gold or gold to EGR is not taxable. However, if you sell the EGR, then tax on capital gains will apply. EGR is also traded on the stock exchange, so there may be a price difference from gold, because of the demand or the supply of EGRs in the market. Our simple conclusion, buy SGBs.